Hello viewers. Today we are studying earnings per share, which is a chapter from VAR F1. So earnings per share is basically a financial statement component which we show for the income statement and discontinued operations. The earnings per share is calculated for income statement and discontinued operations. It is very important for companies to show EPS in the income statement. It is calculated on net income and discontinued operations. So we'll see the types of EPS. There are two types of EPS. The one is basic EPS, which will know how to calculate in further video. But let's just keep focus on the theory part. So basic EPS is a simple capital structure. Simple capital structure means you have only got like common stocks and no other preference dividends or dilutive dividends or other stocks that can dilute your EPS like bonds and securities. Just only common stockholders you have for which you are calculating basic EPS. Diluted EPS on the other hand is a complex capital structure. It includes convertible bonds, preferred stocks, options. So these kind of stocks dilute your EPS, or which we can say is reduce your EPS. Basic EPS is calculated from the net income and income from continuing operations, and for the discontinued operations, it is separate. There is a note that I have given here. Basic EPS is shown in the net income statement, and the EPS for discontinued operation can be shown in the income statement or in the footnotes. So here we are. Formula for basic EPS. Basic EPS is net income minus preferred dividends divided by weighted average of common stocks. And then we have got preferred like this. What are preferred dividends? If you might wonder what is preferred dividends, that is something that we give on the shares. Dividends is something that we give on the shares. So there are two types of dividends, preferred dividends, cumulative and non-cumulative. Cumulatives mean dividends that are accumulated over the previous years. Like there are dividends that we have to given for last years. So we will calculate them and add them to this year also. Non-cumulative dividends are ones that are only declared for 1 year. Cash dividends are not deducted from the net income for calculating basic EPS. Instead, they are deducted from retained earnings. There's one thing that I would like to mention for your future help, like every kind of dividend, cash, preferred stocks, bonds, or any kind of dividend on the stocks are deducted from the retained earnings only. So the other thing we will remember as calculating the EPS is stock split and stock dividend. Stock splits mean that there is a number of stocks we have, but we will split that. There is maybe 2 for 1 stock split. Like for every one stock, we will give another one stock. So if there is 100 stock and there is 2 for 1 stock, then there will be 200 total stocks. Stock dividend is given means given additional stocks. So these are some of the basic things, and we will end it with this today only. Small stock dividend. Small stock dividends are the dividends that are less than 20 to 25%. This kind of dividend we issue on fair market value, because the company doesn't have much effect on it. Large stock dividends are more than 25%. In this case, the dividend is given at a par value because company has a large amount of stock that has to be given as a dividend to those stockholders. So thank you guys. If you have any problems or any doubts, you can comment down in the video, and I will reach to you and help you to clear your doubts.